All right. Hello, everybody, and welcome back to another Pepperstone live event here to talk about everything to do with markets. My name's Thomas Atkinson, and as always, I'm joined by Tyrone Abella. Today, we're going to be talking about a very important topic, and that is Anchored VWAP. And of course, we're going to go over quite a few different pairs. We'll be talking from stock indices all the way through to currencies, cryptos, and of course, some commodities. And boy, oh boy, there's some massive moves going on right now. Tyrone, what do you think of the last week? What do you make of it? We've got April the 2nd looming, and we've got a lot of volatility and some great rebounds, don't we?
Yeah, no, we do. Welcome, everyone. And yeah, I think, look, it's fulfilling everybody's promise of really good trading. I think as much as we're seeing a lot of volatility, I think we're seeing some really important technical levels holding up and being respected. So that really gives everybody the opportunity to actually trade these pretty big moves, actually. So looking forward to getting into it.
All right, well, let's start off by actually going into some live market analysis. And I guess it's always nice to see how things might work in the current markets and what you could have done over the last couple of weeks. And this is, of course, a focus on Anchored VWAP. So what Anchored VWAP is you've got it over here, and you generally find it in the projection area. And you see it's a volume-based approach, and I like to star it. And you can grab it inside of your TradingView platform with Pepperstone and obviously start to use it. Now, one of the things I love about Anchored VWAP is it's really about where you place it. So there are two really main schools of thought. One, that you place it behind large swing zones, and then you use it from that. And then, of course, the second one is you place it around large news events. So that is that if we have a non-farm payrolls, which is the jobs report once a month in the US, or a CPI inflation number, or something else that moves the market in a drastic way, tariff discussion, who knows, anything could happen. When these types of large moves come through, this is a great point for us to then start to play with Anchored VWAPs. And like any other tool, they can be used with other things. So what I'll do here is I'm just going to show you a couple of ways that I like to use Anchored VWAP. So what I like to do is look at key levels. Now, you'll notice up here that we break below a previous support. So we've got this about 58.40 back in the past, and we break below it, basically closing below it, and then we rebound back to this level, find some resistance. And this is what we call role reversal. So it's basically where support becomes resistance, and then markets obviously move on to the downward track. Now, in this case, could we have used Anchored VWAP off that level? Well, what I like to do is behind the green candle here, which is the highest point at this point, I like to put it in. And what you'll notice is that when you do this behind very key levels, you tend to find that the Anchored VWAP can be respected quite a few times. And then indeed, if it keeps following that thing, what happens when it closes above the Anchored VWAP can be a bit of a sign of a change of a trend. So I'm a really big fan behind putting it through the swing. So if you ever think about technical analysis kind of chart, this is the series of lows, lower high, obviously lower low, lower high, lower low. One of the great places to place in a downward trend would be at the lower highs. And of course, in an upward trend would be to place it between the higher lows, wouldn't it, Ty? And this can be, it's just self-adjusting. It's always the first touch that tends to be the best.
Yeah, and generally, and that speaks volumes of how a lot of moving averages work as well. So I think you can lend a lot of what we look at when we're looking at moving averages and apply it to the Anchored VWAP, which obviously is very price and volume based. So I think, using that same method, I guess, if you like, but using the dynamic support and resistance, I think is the most important thing. Look, there's nothing like, everyone can see static support and resistance right there. They're just horizontal lines. But I think when you add that element of dynamic, I think it makes a big difference to the current markets, especially if you are a day trader or a short-term trader. I think you really need to be a bit more dynamic in your entry points and really understand how the market is actually interacting with key levels.
And how do we get more dynamic? Well, we use the mixture of volume and, of course, price. So in this case, it's beautifully dynamic. And you can see here again, one of my favorite things to do is the first touch whenever you've got a key swing. So if you're going if you put one here and it shows that the Anchored VWAP, let's say it's going that way, as price comes up to that, it's often an incredibly good scalp or day trade zone. So I love that kind of action. And what I like to do is I like to mark it, and then, of course, use our price action to verify what we're trying to do. So what I'll do here is I'll use this 2 hour. I'm going to go down small time frame here for a moment and actually understand how the market interacted with this zone. So what you'll notice is it comes down, and we can see here the Anchored VWAP is adjusted to this time zone. Again, it's based on the low So it's not based on the actual chart itself like a moving average would be. You'll notice the moving averages, of course, are moving towards the actual price action chart that we're on right now. So this is a 20 moving average for a 5-minute chart and a 50 moving average for a 5-minute chart. So we get a low, we get a high, we get a lower low, we get a lower high, we get a lower low, and suddenly we get a higher high. And then we start to form base around this anchored VWAP. Now, we already know this is a key resistance zone because we've seen it once over here. It's hit this zone. It's hit this zone again. So as it breaks through there, what an excellent confirmation of a scalp. And you'd be surprised. I know that sounds super basic, and you're probably looking at this and saying, oh, whatever, man, you place it behind. This actually takes patience for a lot of day traders. A lot of day traders and scalpers, they just want to buy and sell all prices and be, mad, and every single day it's all good and we're all going to find opportunities. But as we often say here, and we've been doing this for a long time now, actually. I always like it when people say they have like 15 years or 20 years of experience. Well, we do have some serious, I may not look like it, but I've got a serious amount of experience. And so does Ty now, when you think about how long we've been doing this, Ty. So the thing is, we got in around the global financial crisis. So it's quite a while now. And as you can see here, that this is a change and this is significant. This is about that temperament thing that we talk about. And in 2025, with the news, with the if it's in the press, it's in the price, with all these types of things, too much news. So if we think about it, this is a fantastic zone for us to see this change. And what a powerful 1-2 strategy that would be. You buy here, place stop loss below here, you angle in for the supply up here. That's it. That's all you got to do. It's that it pretty much is that simple. And what you'll notice is, look at this. It hits this level, finds resistance. Okay, it sells off and then it goes higher. You may not know that at the time though, but from here to here is excellent trading.
It is, yeah, no, most definitely. And I think when you understand it and you know what you're looking for, I think that's when it'll all come together for people. I think, look, if you're only just new to this, you really probably want to be just making sure that you go through and watch our series of webinars that we've done with Pepperstone and check out the library, because we do go quite in depth on a few of these, and Anchored VWAP is one of them. We've got several examples and several webinars based solely on it, like tonight's is. And I think you can see some real examples of how it actually works and interacts in the real market. And when you can actually preempt what you're looking for more than anything else, I think that's the important part, isn't it, Tom? You can have as many lines as you want on the chart, but if you don't really know what they mean or what you're actually hoping they're going to give you, all they are is noise, really. But this is a very, very powerful resource, especially, again, when you're talking about short-term trading. It's a very, very powerful because it's so market adaptive. It's probably one of the most, before price. I mean, price is the most market adaptive thing you can look at, of course. But not far behind it is probably the Anchored VWAP.
Yeah, it's one of my favorites. I'd put it in the top 7 indicators out there, top 5 maybe. Actually, nowadays, it's because it's just such a powerful thing along with swing trade. And actually, the great thing is it works on everything. It works on scalpers. It works for day traders. It works for swing traders. It works for investors on higher time frames. It works for position-based traders. It doesn't really matter which particular thing you're selecting. It is adaptive for your stuff. And it's part of the reason that we love the 20 and the 200. I mean, I would always say the 20 and the 200 are my 2 favorite moving averages. And I think, Ty, you would agree with those as well. We've talked about them quite a lot. So absolutely. Why this helps is because we've got here this significant low. And we know that's a significant low because if you put it on a daily time frame, you'll see it as a bullish style hammer. And of course, it gaps up this week with this tariff kind of alleviation that's starting to come through, plus just risk on. And you'll notice that a lot of people will probably be like, oh, I'm going to buy up here. And that may be okay. And, maybe it'll work and maybe you've got a different strategy for it. But what you'll notice is, at least in the Anchored VWAP, yes, you wouldn't have got a solution yet to get into this buy price based on a pullback yet. But again, it at least, as Tyrone says, finds you an area of interest that then you can build your confluence around. And it's a great first step for somebody that's just coming into trading, investing, and starting to say, well, what actually gives me some edge? This is 2 of the best things, volume, price. That's what we're talking about. Now, let's go from the US 500, I guess, in terms of if we're just looking at it from our opinion. Obviously, Ty, to me, that I think the biggest thing is it could stop here. That we're certainly seeing a bit of a resistance and it's in a bit of a danger zone. But I think the next area that it could stop at is something around this 58.50. And that's really just using not an Anchored VWAP, but the 20 moving average, which is mean reversion. And what you guys may notice is that was tapped a lot of the times on the way up. So often what was respected on the way up will be respected from the bottom up, won't it, Ty? So 58.50 certainly a very key area for us to watch over the next week if we get there quickly.
It most definitely is, and I think it's really, really important that you've actually gone out to the bigger time frame here, Tom, to really highlight that although we're seeing a little bit of action, right now, technically from a long-term perspective, we are in a downtrend, and all we're seeing here is a potential pullback. Now, if 58.50 breaks through and we're trading above the 20 moving average on a weekly chart, then maybe we're going to look at it a little bit more bullishly and say, all right, well, maybe that was a dip that we're going to see, and we might start to see a creep back up to around that 6,000 and over, and maybe to all-time highs. But just as likely, and probably even more likely, if we're going to look at the actual trend itself, we may roll over here and look out if we get a break below that 5,500, because then we're looking at a significant pullback down to around probably 52.50 to 53. So what I like about this, Tom, is, and I'm sure you'll agree, the double top that we were talking about on the S&P 500 quite a few weeks ago now has effectively played out. It's already hit its target. The neckline was broken. We saw all the things we needed to see, and there it was. We love it when patterns prove themselves with a role reversal zone and support and resistance. So it was really, really good to see it do that. But the war's not over yet. Look, that 20 moving average is right in its face, and we've highlighted 4 examples there of where it's touched it on the way up. And, in true technical analysis style, it could definitely be a resistance point for it on the way down every time it touches it. So we're watching that 58.50 with extraordinary caution and interest, because it's a real key turning point. It's probably one of the most important points on the S&P right now, I think.
Well, let's apply the same methodology that we're just talking about with Anchored VWAP to something like the US dollar then, Ty, because a lot of interest in this as we've seen dollar weakness, and then, of course, now it's come into a little bit of dollar strength. And what you'll notice is, again, I've used the Anchored VWAP off the last high. And, again, what we'll do is we'll just show you some of the others. So we'll use the one up here at the high, and you can see little gap up, first touch, find resistance, comes down, random gap up, then down. I bet you the euro looks a bit better than this. That was a big switch point. And then quite a lot of respect. These are the 2 main ones that I would have. And you notice we are approaching price. And what's happened here is you've got the Anchored VWAP lining up with the daily 20. So could this be a day trade kind of position area of interest? Yes, it's an area of interest. Of course, it doesn't mean instantly, oh, wow, I'm going to sell, let's go. It means be, obviously interested, be cautious, look for price action. Patience, react, don't predict. As we saw before when it comes to the S&P and it came back down, we saw a change of trend where it had multiple resistance points on the small time frame, and then it changed up. That builds your evidence approach. And I think it's really important for us to build the evidence approach whenever we can. So some nice stuff here by the dollar. If it breaks through here, Ty, quite a lot of upside, I think, potentially back to the 106. But for now, it's only very small time frame change of trends, and it's coming into that resistance.
Yeah, absolutely is. Look, it's a very, very interesting one, this one. Very similar. Like I say, we expect that it's more than likely going to be resistance at that point. But we've discussed several times over the last few weeks where the 103.80 to 104.20 area on the dollar index is extraordinarily important anyway. Now, the fact that the 20 moving average is above it and could cause resistance at that point. I like it because I think it's got we've got great upside and great downside, regardless of what it does from here. And I think this is why it's such an important zone, because if we can get above that 104.20 again and trade solidly above that 20 moving average and the Anchored VWAP, then I think it opens us up to a 106 move, which obviously in turn would mean probably a 106 move back down on the euro, coincidentally. So I think it opens up a couple of trades really, but a sell-off from here really opens up that low again. So I think there's 2 good opportunities. And honestly, I'm not really biased either way. I'm quite happy for either of them to play out.
And you'll notice here, Ty, as well, I think a lot of people probably falsely believing that the euro has fallen through support. I know that on certain timeframes it will look that way, but if you notice here, we actually have a little bit of demand on this side. So let's actually jump an Anchored VWAP off the low. So we would put it off probably this low down here, and then we'll put another one off the low. So we'll together. So you'll notice where have we found ourselves? Probably no coincidence that we have managed to come down here. And this is why, to me anyway, I don't think the euro has done enough to say, what, I'm ready to short, I'm ready to go way lower or anything like that. It just doesn't seem to be that kind of key level that you would target. So So this is an area where I could still see bulls, and we could obviously still see, as you said, potentially weakness on the dollar. And for that to happen, we'd probably need to break through 108.50. If we break through 107.50, then as you said, coincidentally, we're probably 106, aren't we?
Yeah,
so big move, I think, is coming here on the euro.
Yes, yeah. There's a lot of open space. There's definitely a lot of open space there, and we like trade with open space. There's no question about that.
Yeah. Let's now move from a currency over to a commodity that's getting a lot of interest, and that is, of course, one of our favorites recently, which has been silver. And what we'll do is we'll actually load silver up here, and we're going to get rid of that. And we're going to load a couple of lows off. So we'll load this lowest low. And as you may notice, once up, twice up, 3 times, like it's up. And at this point, there were actually some excellent day trades in here. And I'd be interested to know if anyone in the chat actually did take, that's viewing us live right now, if actually did take a silver position. But I think this is a real testament to how good the Anchored VWAP is at predicting levels, or at least finding levels. Remember, it's done off the low. The trend has changed towards the upside. The overall bigger trend has started to turn upside as well. So that's the daily, the weekly, that type of stuff. And then every pullback has so far been met by bull demand. And what that does is it helps you say, okay, well, as long as we're making a series of higher highs, as long as we end up making a higher high, what's to say in the future this is not a great level to have? I'd leave it on my chart type if we made a higher high. I'm not going to take it off.
Absolutely. Absolutely. And I think that understanding where, having the ability to understand where something is going with a high probability is key to trading, right? That's obvious. If we say that, people are going to be saying, well, obviously, duh. But it's actually key. And whilst we're getting higher and higher lows, there's no reason to disbelieve that the trend is actually long. I think people fall over more often than not, Tom, is when they're actually trying to reverse something that doesn't want to be reversed. And realistically, what we're talking about here is continuation. So if we see a higher high formed, maybe call it a 34.50. If it gets to 34.50, why would we take it off? Like a trend is in place and indicators are holding up until they're not. Trying to preempt the death of a trend or a broken indicator, it can be really dangerous to your trading mentality because you don't know when the next actual real trend is going to start. So you really want to be following all of the trends that you see for what they're worth for as long as you possibly can. And when they do eventually roll over and fail, it may cost you a trade, but there's a chance that you might have got 4 or 5 in that direction before that happens. And sometimes if you're looking for the reversal signs, you may not even you'll probably get out of a break even anyway.
Yeah, exactly. And that's the problem, Ty. You've got no real idea of being able to put a stop loss or a take profit or those types of things incorrectly. You're going to get break evened a lot. Like, you don't want that. You want the power of obviously what has already been running. I've got a great chart to share with everyone in a moment. We'll actually use this chart just to illustrate how wild things can get if you don't follow the trend. But we do have some questions coming here. Stuart says he's got silver, but he's not doing it on the day trade. He's getting more of a longer term position. And Dane asks, are you changing anything on the Anchored VWAP? No, I think it's like a lot of indicators. When you're using an RSI, when you look at a UBS report or a JP Morgan report or a Goldman Sachs report, they're not modifying it. When you use MACD, Ty, do you modify MACD settings?
No,
because
we've been there, done that, and tried every modification there was. And quite often, we really find that the standard tried and true is what works. Just a special shout out to a very special shout out to Dane, actually. Dane has been one of our avid supporters. I reckon he'd be pushing 7 years.
Way longer.
Maybe longer. I reckon maybe 8 or 9 years. I reckon it was about 2016 when we first met Dane. We actually met Dane in person, and he's been an avid supporter and a follower all that time. And that is, man, his journey is nearly as long as ours, Tom. it's awesome to see. And I think that, and I think it's really, really important, and Dane would attest to this, that we've been saying the same thing and using the same methods all this time. And really, you could go back to 2016 and find a webinar. You'd be you'd be fine. Apart from the fancy tools that we've got now because of TradingView, the concept of what we're talking about and how we follow price and how we look at trends has not changed. And I don't think it ever will. It hasn't in 100 years of trading and charting. So it's not likely to change anytime soon. And that's because price action and price movement is the most important thing. First and foremost, understand the highs and the lows, where resistance is and where support is. And that's where you're looking for. The lightning bolt that we've coined and termed, I won't hear of anybody taking away our lightning bolt, Tom, as something that we created, is really the hallmark of what we're looking for all the time. And if you're following that and using an anchored VWAP, for instance, or the moving averages that we're talking about as the dynamic support and resistance to validate and help support and resist those lightning bolt moves, you are a long, long way ahead of the curve of people who are really trying to decipher which way the market is actually going.
Yeah, so I agree. It's been a pretty big journey, and obviously, look, we always adjust and add new things on, but I think the core structure is the key. You've always got to have a really good core. If you have a good core, you can build upon that with the new tools, as Tyrone said. But ultimately, you got to have the good core. If you don't have the good core, you're going to make big mistakes. Obviously, that comes to the psychology as well of the market. So we obviously always have to go and see the gold whenever you're talking silver or any of these other metals. I think for gold, look, we're obviously very happy with where gold's at, 3,000 plus. We've been talking this 2 years. You probably go back and watch. I know you can go back and watch our webinars live series, and we've been talking gold 3,000 since 17 something. So a long time ago, and it's good to see it here. But at the same time, I think you've got to just go back over the higher time frame. We're going to look at a few higher time frames now, and you'll notice it's been on a bit of a rip. So it's been on a pretty big tear. And to me, it looks exhausted. Now, that doesn't mean it's over and the trend's over and, oh, my goodness, this is all ended. Of course, it's going to take a lot more than that to dump gold off. And you'd be specifically wanting to use the 20 weekly moving average as well, just on that, by the way. Have a look at this. Since 2000, it's been a very, very nice pickup zone for gold. But, yeah, it's quite far off that still. So you're talking 2,800 possibly on the downside. It's possible. And you're obviously talking consolidation, and on the upside, maybe 36. I won't anchored VWAP this one because, the key that you would, I guess we could.
Yeah, and I think the important thing that we can take from that weekly chart also demonstrates and highlights the fact that gold's moves have been equal in their length. The three big waves of gold on the 4 hour have all been very, very close to being equal. And I think a lot of Thomas's basis for the 3,000 being reached was on the fact that that swing did preempt that move to over 3,000. So really, the longer it holds above 3,000, consolidates up here, probably the more chance there is that it's actually going to go longer. While it keeps its head above water and the new water line is 3,000, I think that really gives. And I'm not going to be surprised one day. Soon we wake up and gold's at like 3,100 or 3,200 because it moves very, very quickly when it does move. And the longer it holds above a very key level, the more likely that move is going to be long.
Yeah, I think gold is just one of those classics that's really well positioned. I think silver needs to play catch up, by the way, to this. Use your silver gold ratio, you'll see it. But look, it's a bit of a beast. It's been moving. To me, it's exhausted on some of the indicators that we use nowadays. But you'll see here, I've loaded 2 anchored VWAPs that I would have on my charts if I was day trading, if I was scalping, if I was trading as well. And they are not at the current price. They are lower. And I think that's important always to state. Of course, you've got your demand through here as well. So this one here, not much demand, previous resistance, so obviously support level and a demand level. So 2 key levels I would be looking at if I was using anchored VWAP and gold. Now, I mentioned before that I'll talk about a stock or something that shows you how high trends can go. And I just wanted to kind of show this one, which is PLTR. Now, some of you be familiar with this. This is Palantir. It's a US stock. The reason I bring it up is just to show you how trends can get really aggressive, and more importantly, that why you don't want to go against some of these trends, especially in stocks and indices. They are often programmed towards more of the upside. And this type of candle here is an outlier candle. That is a massive candle. So I just want to give you the percentages here. So this is a 38.72% weekly candle in a stock. So when you're thinking about that, that is a significant size. And you might say, well, it's got to be done. I'm going to short it. 38% in a week. Are you mad? That's not going to happen. We're not talking small fry money either. This company is worth $226 billion, so it's not exactly small. And then the next week, it goes and proceeds to put on another, in the next 2 weeks, 12.6%. So imagine if you were trying to short this and go against that trend. Oh, it's overbought. I'm pretty sure Doesn't matter what indicator you put on the chart. The RSI going to be over the moon. It's going to be in the stratosphere. You're going to put the anything's going to be stratospheric on the absolute 100% maximum. But that doesn't stop the trend. Eventually, of course, this is unusual, and you know as well as everybody else that that's absolutely bonkers. And of course, it got crushed after that. But I guess what I'm trying to say is this is what can happen to you, isn't it, Ty, when you think you know better than the market. That old adage, the market, what is it? The market will make as many people seem as stupid as possible. I love that one. Absolutely. I said I'll put that on a T-shirt and I'll walk around with it.
Yeah.
Actually, we do have a T-shirt, Ty, that says you are the exit liquidity. There you go.
Yeah.
That's for everyone reading it.
Absolutely. But I think, but again, like, what we always really try to help bring across, and I think I've got another example, Tom, that I wouldn't mind you bringing up. Just I know I didn't pre-warn you about this one, but could you bring up a daily chart of JP Morgan? Because I just want to probably emphasize how important key levels can be, seeing as though we are talking about some very key levels, and also the markets find ourselves at very, very key levels at the moment. And the return, one of our favorite concepts is obviously support and resistance, but when a market actually returns to a very, very strong level. Now, you can see we talked about the 200 moving average, I think it was last week or the week before, and I just want to show you how things can come together so quickly. You can see on the daily that we've been in an extraordinarily strong uptrend on JP Morgan, right? There's no question about that. Higher lows, respecting the moving averages all the way. But then we saw MACD divergence weakness at the very top of that. We saw a breakdown to the 50, bounced up to the 20 moving average on the way down. The 20 moving average provided that resistance that we wanted to see, and then it sold off. Where did it sell off to? Well, what do you know? A role reversal zone that has seen an extraordinary amount of trading. If we can put a horizontal zone where, well, that'll do. Those boxes will be fine. That level there coincides with an extraordinarily strong level of support, and what was also resistance on its way up. Also the 200 moving average. So that to us is an absolute gold star trade, because not only has it come down to an extraordinarily strong level of support, there's about 4 different support levels that you can actually put on that. And I just want to really emphasize how important it is to actually go to these bigger time frames. Even if you are a day trader or a swing trader or a scalper, it's always important to have a look at the bigger picture to know where something it could be potentially going. Like in this instance, you would have been shorting off a 20 moving average, obviously, but the target was going to be around that sort of 225 area. It doesn't necessarily mean you have to trade the daily chart, but having an understanding of where the real support is will give you a distinct advantage when you go to the smaller time frames and look for pullbacks in the direction of that overall trend. So I just wanted to highlight that.
And of course, if we were using Anchored VWAP here, you would have seen that first one. Now, the second one would have been of interest because, of course, you would have been loaded in. And there's no doubt that this actually is also similar to the S&P. I would have been sitting here during the day with an alert hit, Anchored VWAP. Okay, first touch, let's have a look. Now, this brings up that second thing that we talk about, patience, react, don't predict. In this case, I like that level. I potentially really like that level. Now, of course, it doesn't have what Tyron's talking about, which is resistance support on this left-hand side. But imagine if that did change trend towards the downside there. Would that be a good scalp? I would argue it could certainly be a very good one. And, of course, if that also had on the left-hand side better supply, geez, I tell you what, Ty, if that had then been activated, I would have shorted it. Why not? You could do that. All right. Let's go to the next one. So, Ty, you've been talking a lot about oil, and obviously you've been going to the bullish side a little bit more than the bearish side, and that's been proven to be correct over the last week. So we got through. Oh, we got 2 Ties now. Hello, 2.
I'm not sure what happened there.
Is this Inception?
I cloned myself.
There's Where was I? Dolly? Remember the Dolly the sheep? I wonder what happened. I know Dolly the sheep's not around, but I wonder.
That was the AI. That was the AI version. I've been practicing an AI version. That was AI.
That AI assistant. Now, if you're not familiar, guys, you can get about 10 minutes of video footage of yourself and clone yourself now, which is quite freaky.
The real
Except the smile. The AI, the smile always looks totally freaked out. Like, has anyone noticed that about the AI? That the smile is the freakiest thing. And the eyes, they're creepy as hell in these AI things. Either way, Ty, you've been obviously bullish here on oil, a little bit more biased bullish than short, of course, which is based on, I guess, the key support level. Now, we've managed to get through this tweezer to the upside. So what we can do is talk us through this, and I'll add some anchored VWAPs to some key levels that I think are worth watching.
Yeah, I think that, look, it was really a self-fulfilling prophecy when it started to make higher highs and higher lows off this base, that, it was going to creep itself back up into that middle of that quite significant channel between 67 and also the 72.50. I still think that the 72.50 is potential as the long on this one. We're seeing the series of higher highs and higher lows starting to form properly now. And at 72.50, we know we've got very strong resistance there, but it is right in the middle of that channel. So, if you're going to scalp oil, I would suggest you draw the barriers between the 67 and 60 and 72.50 and trade and play nice in between those two. Because I think whichever way the short-term trend is going, so it could be a 1 hour, 2 hour, or a 4 hour.
What was the high
trend. The 72.50 is my high, currently. So I'd be looking at the 72.50 and the 67 as the bottom level for that. Any trading in between there, I think, is open season. I think any way that the trend is actually moving, I'd be happy to trade in either direction. It's no real surprise. Look, you don't have to be a genius to work out that the 67 was a very strong level. We talked about it a few weeks ago, why it was such a strong level, about fair value and where oil companies actually make money. But the technical said so as well. And the further back you go, the more important the 67 level becomes. You can see it's got an amazing amount of interactions at that level. So it's very, very well protected. But we're sitting right in the middle of that channel right now. We're $2 and a little bit in. But there is still quite a bit of upside to the 72.50 to go. And if it does happen to roll over at this point, look, I'd be aiming back for the bottom of that channel. I still think the channel is strong at the bottom and can provide some very strong support. I do like it. I think it's starting to be very tradable again, oil, especially on the scalp.
Yeah, I agree. So I think we were kind of a little bit more negative on it until recently in terms of being a tradable pair. Now I've just gone down really small time frame and just shown. So the anchored VWAP off the bottom, first one's not that great. Obviously, you're not going to use it past that point, so that one can be pretty much removed. The one coming from the top, though, so what that means is coming off this high, a lot of touches on the way down. So, of course, the first touches over here, I would have been looking more towards the short end. And that's proven to be, correct for a period. And of course, you're scalping, so you probably look down there. Probably the worrying sign here would have been this one, because a lot of people would have had stop losses above this point here. And I guess I'd need to do further analysis. But again, still a respected zone the first time. And you'll notice there were wicks coming off this, which shows very fast action coming off this point. So with other things, the anchored VWAP can be quite effective. And this is not exactly, up until recently, probably the most technical pair that we've seen. There has been others which we've been focused on, the ones that have been in really sustained quality trends that weren't at critical zones. Critical zones can obviously switch and change things. As Ty said, we're in range. All right, let's go to another one, which is, of course, crypto here, and we'll look at Bitcoin. Can you use anchored VWAP on Bitcoin? Well, of course you can. So you can pop that behind the lows as well. You can see some excellent touches. In fact, this was one of the analysis points that we discussed on the channel. Oops, anchored VWAPs on the channel over the last couple of weeks, Ty, as we were breaking through 84.5, and we went towards the bull end. And to me, a lot of this was, break 84, break these highs. You see here a low, a high, a low, a low, and then basically the lightning bolt up. You get a pull back to the same zone. Excellent buying in here. Excellent buying in the break as well. And, we'll see whether it can keep going. But at this stage, of course, you'd be looking at that 92,000. And I think it'd be worth keeping the anchored VWAP off the low down here. So you'd want to keep this one off the low and keep that on your charts. You'd also want to be probably looking at the ones from the top as well. So how I would do that, previous swings. So we'd, this used, okay. The respect it had the first time. So very, very good. And then we'd probably go back through each major swing and see how that's looking. So we'll go one here. Okay, so that was a very aggressive short off. Obviously, that's completely used, so no point in having that one on anymore. This one here, I would argue that's not any point in having that one because it's already got used. This one, obviously pointless. And then off the top, I think, that one's still very, very live. I'd go in and analyze this a bit better and make sure I'm on the right time, but you can see there are some respects. So is this going to be a key point? Absolutely. I think 92,000 already because of the previous resistance is key. And again, 92,000 is going to be key because of anchored VWAP as well. So if you're looking towards where is the problem going to lie, probably 92,000. And again, day traders and scalpers could be there having a look.
Yeah, absolutely. I think for my 91.50 to 92,000 is the key break. I would expect that there'd be very heavy resistance at that point. But by golly, if it does happen to get past there again, you're probably going to start aiming at the 100. So it's an extraordinarily key point. And I think there's good scalping up until that point.
Yep. So I guess what we've demonstrated today, Ty, is that Anchored VWAP is a great hunting tool. So what that means is you go out and you put it on your chart, you put it on your swing lows and highs, you put it on the news events in particular if you want to do that for things like currencies and during non-farm payrolls in particular, I find is a really good one. And then, of course, what we do is we want to make sure that we're activating that type of stuff where we set alerts for it. So if we can set alerts in TradingView, which we can, then of course we can come in and then spend the time in front of the charts when we need to as scalpers and day traders. I think the big thing for scalpers and day traders is we often, when we first started, we set these rules like, oh, I have to be there at 1 hour into London, half an hour before. There are trade strats for that, but if you want to have a little bit more chillax kind of time, you set up a bunch of pairs, you set up quality pairs, and then of course you just set the alerts for when those levels happen, and you say these are the parameters. And of course, one of our favorite parameters is price action. If price action on the small time frame confirms that is being respected, it's an excellent 1-2 combo. You can find out more about that, through the channel that we've been doing with Pepperstone over at YouTube as well. Sign up in the links in the description down below to get more of this info. And then, of course, over at fxevolution.com. But Ty, I guess that kind of wraps us. We always like to have one thing to take away from today. I would like to say that, again, I'm going to say this year is driven by no emotion. And what that means is really just don't pay too much attention to the news and instead just pay attention to the price action, to the volume, to what they're doing, not what they're saying. I think it's really been shown again to be correct over the last week, where everyone's been freaking out about April the 2nd, yet the market has been reacting incredibly bullishly and showing that relief. And that's just, climbing what we call the wall of worry. What's your top tip for everyone this week?
You stole a little bit of my thunder actually, but I was going to say, never has there been a more important time to trade what you see rather than what you hear. So it kind of along the same lines, trade what you see, trade what the market is doing, as opposed to what you're hearing and seeing in other forums and on TV and in the media. Because I think that's there's never been. I think the trading is exceptional. I think we've got exceptional opportunities for probably the rest of the Trump administration, to be truthful. But I think 2025 is going to be jam-packed full of excitement and volatility. But right about now, and what we've seen so far this year, the volatility has been very, very well contained. And in terms of being able to harness it and trade it, I think that's really the important part, is giving us opportunities on the downside and the upside very, very clear. We don't like the volatility. We don't like out of control volatility, Tom, where you can't trade it. No one wants to see 1,000-point drops that you can't trade and that can reverse just as quickly. We want to see volatility that we can actually trade and take advantage of, and that's what we're seeing so far. And I really don't think that we're going to see much different for the remainder of the year. And I think that's really, really exciting for all the traders that constantly follow us and have great opportunities.
I think I just put the point there. It doesn't mean you can't trade those, but you can't trade them replicably. And that's the key. We want to create replication business strategies. That is what trading is. It is a business. Ty, some great points there. Thank you so much for joining me this week. And obviously, as always, guys, it's great to have you here over at Pepperstone. Thank you so much. Subscribe down below. Make sure to sign up for the weekly events that we do every Wednesday. And we look forward to seeing you next week to discuss what is going on in these markets and obviously go through some pairs. See you then. Bye for now, guys.
Thanks, everyone. Good night.
Yeah.